What's going on, YouTube? It's Dave's Daily Trades. We are back and we are ready to jump into a technical analysis for AMC. So, somewhat boring day today. I get it. It is what it is. But I have been looking into some very interesting things that I want to share with you all today, specifically on the TA side. But also, I do want to jump into the options flow per usual. Some really great things going on with the options data. We're also going to be discussing the latest tweet from Adam Aaron, which is just so incredibly bullish. And lastly, guys, just talk about how painfully these hedge funds are bleeding right now. But without further ado, let's roll into that intro and hop into the technical analysis. And we're back. All right, folks. So AMC was down 0.31% today, which is literally just 7 cents on the day. And I get it. Boring as hell. I know. Even yesterday, we were literally up 1 cent. So, a little bit more volatile than yesterday. No, I'm kidding. It sucks to watch this price action. But there are some really interesting things going on. So what I have been looking at is really comparing... we'll actually show you this in the larger time scale here first before we move on. Comparing this movement over here from that last dip to $20.80. So this would be like $12.14 to $12.17. And I do believe we have something very similar playing out here. So on the smaller time scale, we can check this out. Of course, this is where we had that first dip. And then this is the second dip here. And this is just very, very identical. Now, no promises that this is exactly going to be playing out, but this sure looks very promising. So, first of all, this time frame, just about the beginning of January, came down, touched this trend over here at like $22.57, came down for that spring action at $20.80, came back up, bear flag down, to back to this trend area here, push back up, and then more of this consolidation stuff that we've been seeing for the last couple of days. But if we look at it, it is almost identical. Where what happens? Well, you get that spring action down, automatic reaction to the upside, slight dip down, then you start moving to the higher end of that trading range. Before what happens? Well, you dip back down into this lower trading range, you move up, that's this right here. You move down, and you literally just bounce around, and that's what we're getting right now. And today, the past 2 days, literally consolidating. I think, honestly, extending this move a little bit more than we expected. Now, I would have loved to see this play out today, but I do believe that if this comes to fruition, we should see a small pullback, possibly open lower tomorrow, something along those lines, before we do have that kind of repeat action that brought us from $23 all the way to $30. So that's just about a $7 move right there. That's pretty freaking nuts. That would be absolutely the best case scenario playing out. And I mean, who knows? The more that they drag this out, because sure, they can go on Thursday and even Friday and play out this same pattern that's going on here, just dragging it out. But that's just going to make this launch up much more volatile, which means we should see even more upside potential. Now, one thing to keep in mind here, max pain. Max pain is at that $24 mark, which is why we're in this consolidated range right here. It's how it goes. It's manipulated. We know by now. I mean, this looks extremely, extremely promising just because of how this setup is just almost identical here. Now, a few differences, but all in all, this is what I'm comparing this move to right here. So we'll see if it plays out. Now, back to just AMC. We'll go on this smaller time scale here. We are going to take off extended hours because that just makes it way too messy. Now, guys, what we've been talking about is the Wyckoff accumulation schematic. Now, it's called a schematic for a reason because not everything is going to play out 100% to the T as per the schematic. So what we have is our lower trading range here between that 20.80 and you can even say $25. This area here is that lower trading range. And then your mid to upper range is going to be over here with your automatic reaction at $31 and your PS here at $34. And we'll actually extend this all the way. Make that straight, or straight as it can go. Jeez. All right, close enough. So what's playing out right now is we did get that double bottom, but we have your sell test in phase B. This could be your spring phase almost, and we've discussed why I am calling this a spring compared to this area right here. Just go back to some recent videos. I probably discussed this like yesterday or 2 days ago. But now what we're getting out is this test in phase C. And all you're doing is just testing this lower range, testing the supply and demand, testing liquidity before we do start that run up. Now, of course, like we just discussed, this fractal or pattern or whatever you want to call it should be playing out. I would hope to see it tomorrow. Now, if it doesn't happen tomorrow, potentially Friday, but if it doesn't happen, I would just expect more kind of sideways movement along the support here at $22.55. Around that area would be great. But nonetheless, if we do get that 7% move, that would be really the start of phase D on this micro scale time picture here. That should launch us potentially even breaking through this downward trend here, which would lead to a very interesting next week, guys. Now, all technicals are at a very solid level. Looking at the MACD, we're still in that negative territory, which means we have room to run on this 1 hour chart. Same thing with the RSI. RSI is still under that 50 mark. Once we do cross 50, I do believe we are going to start to see significant moves to that 70 and potentially even higher range, which of course would lead to a very great run. Now, I don't want to get too much ahead of us, but the way I kind of see this playing out, if we look at the schematic here, this is your test phase. Like I said, we'd move up, potentially break out of this range, get rejected somewhere over here at your automatic reaction or PS, somewhere in here, get your backup LPS phase in between here. So it'd be like $28 and $31, get your SOS, and then potentially move back into our larger scale picture here. And like we've been talking about, this is really what we're looking at. So you have your selling climax, your sell test in phase B. And of course, guys, this still is an accumulation schematic. The biggest thing why we're against the distribution schematic is because over here, you would have seen a up thrust and kind of just like that crown topping over here before the dump. But because we are on this kind of lower trend down, that's why I do believe it is accumulation. And plus, we would have seen that distribution play out already, in my opinion. And we haven't seen that yet. So that's why I'm all in on this accumulation schematic on the larger scale time picture. Now, of course, you can have those micro distributions kind of stuck in between the larger scale accumulation, which is exactly what we got over here in these ranges here. And of course, at the top over here, those are distributions, but they're micro, guys. They're small moves to the downside. But the larger scale picture is really what we care about. We can use those micro scale timeframes and the micro scale accumulations to really see how it's going to fit in the larger scale picture, like we're doing in this range here, and then get the overall idea. But always come back to this larger scale picture. That's really what that rant was the point of. But nonetheless, guys, if we do get that push tomorrow, that should be interesting. But really the biggest thing is coming back into our trading range, the larger scale trading range. That is between $29 and $31. I would like to see us come up. We might get a few tests on the lower end of our trading range before really marking into phase D and then essentially coming back up into that $50, $60 area, which would be our SOS phase. And things would look freaking great from there. That's really when the next leg up and the push to all-time highs continue. Now, phase D. Phase D is really where that volume needs to pour in. That's how I personally determine when to enter those phase D accumulation schematics. But if we don't get more volume, then yeah, we're probably going to be floating in this area. But really my biggest thing is we need to hop down or hop over this downtrend right here, which was established on, call it like 12-1 to present day, we have gotten rejected 3 times now. So the 4th time, Miss Amy loves to break out. And then also on this larger scale picture here, we do have this downtrend that was established way back when, over here on September 13th. We got rejected again on November 8th. Somewhat rejected on the 16th. Kind of came up for a retest, but didn't make it all the way. So again, 1, 2, we can potentially call this 3 over here. But what would I like to see? A breakthrough here, retest, breakthrough, retest. That would be kind of your LPS in phase D, and then mark up into SOS. That's how I imagine how this is going to run. But of course, guys, day by day. Let's not get too ahead of ourselves here. Or I shouldn't at least get too ahead of where we're going. Other things. MACD. Again, MACD is at that negative level. We're at negative 2.42. So we have room to move on this here. And of course, guys, as we can see on the daily chart, these histograms down here are starting to come together, which means we should have that crossover to the upside. Let's hope we get the volume. RSI, guys, RSI has been beaten like a dead dog. And we're currently sitting at 33. Again, we have lots of room to run. Now, very hopeful for this same pattern here to repeat itself yet again. But of course, guys, if it doesn't work out, it's totally fine. Now, speaking of downside, where do I potentially see us going if this doesn't play out? Well, we do have a lot of support in this area here. I mean, kind of scary to think this, and I think the 30-minute chart did a great example of this. Yeah. I mean, this consolidation right here is madness. You have one push to the upside, one push to the downside. Besides for that, you've been on this trend here, this trend line at 2250 since 1.5. That's a lot of consolidation. We really need to pick, if we're going to move up, if we're going to pick down, but this type of consolidation is not going to last too much longer. Now, again, we could kind of come down into this 21.27 or even a $20.80 third double or a third bottom on this. I don't think that's going to happen. I love the double bottom setup, how we have it right now. And even looking back to some older charts, oops, did not want to do that. Look at what we got here. We'll zoom in a little bit. We got very similar moves where you get this somewhat of a double bottom here, double bottom before you start marking up into phase D. This is your SOS before push to all-time highs. Very similar, and this is just more extended, of course, but very similar double bottom. Boom, boom, before you mark up. This, you didn't get that SOS phase, and this was more just a straight launch pad, but that's totally fine. But again, guys, this can really reverse at any point in time. No one's going to predict the exact date. Sorry, BAM. Sorry, other people out there. No one's going to be 100% accurate on this is the day we're going, this is the day we're moving, this is the percentage base, this is the price point. No. We can move because we went from $1.90 and within 2 weeks' time went to $20 and some odd cents. Again, over here, June, $9.02 end of May. By June 2nd, we're up to 72 freaking dollars. And again, guys, just like in the past, history is going to repeat itself, and we will be pushing to all-time highs. Now, enough of the charts. I do want to hop into the options flow because a lot of good information is coming out from this. So, just to recap from yesterday, we had a lot of money spent on some calls. We had that $29 call for the 7/15/2022 expiration at 1.2 million, and then a $15 call, again 7/15/2022 expiration with a premium of 2.3 million. A lot of money. Additionally, I didn't cover this in yesterday's video, but shout out to everyone who remembers these 6/17/2022 contracts for the $60 strike. Lots and lots and lots of open interest around this, and even specifically for that $60 call. That's almost the only strike I've been seeing pop up on the larger scale picture here, or larger scale buyers for the 6/17/2022. We've seen a lot of these come over the last couple of weeks. But nonetheless, let's jump over to today. Now, of course, there are some kind of far dated expirations that came through that really I'm not too worried about, specifically some puts, but that's fine. But moral of the story today is more of the selling of contracts for around the $20 to $30 puts for short dated contracts. Now, what do I mean by that? Well, look at this. We have two $30 puts. Both were just about 150-ish thousand for premiums for the 1/21/2022 expiration. We know there's a shit ton of open interest around this, and even actually, sorry, here, a third for that same expiration for 106,000. What do we get again? This is for 2023, 3/18/2022, a put sold. Again, that 1/21/2022, $35 put sold. This is more the far dated. Sell a call. And again, early morning, sold a $23 put, 1/21/2022. So we had I'm just going to count these out for you folks. 2, oh wait, sorry. 1, 2, 3, 4, 5, 6, 5 large-scale contracts, all puts being sold for that 1/21/2022 expiration, which just so happens to have a shit ton of open interest. Now, are we expecting a move? I mean, hey, someone always knows. And looking at the charts, I mean, we are well overdue. We have a massive double bottom. Technicals are at very low levels. We just compared the last kind of spring action to where we stand right now. Things are looking good. Options chain looks phenomenal. And even we got some trouble going on in the overall economy with rate hikes. I mean, this shit's inevitable, guys. So what do we got for flow levels coming in today? Well, like we talked about, that 6/17/2022 expiration for those $60 strikes, those are popping. Lots of call volume coming in today, 75%. That's what I like to see. I love to see this jump like that. We had a 1/14/2022 in the 1/21/2022 expirations. Those definitely had a decent amount of activity today, but specifically that 6/17/2022 is where it's at. Now, what are we targeting if we break it down by strike? Well, it makes sense. A lot of our activity was around this $22 and $23 range because literally for the past just about week and a half-ish, we've been flat at this area. Besides a couple jump ups and spike downs, it is what it is. Going further, whoa, look at that. Those are the $60 strikes for June 17th, 2022, close to my freaking birthday. I love it. That's bullish as all hell. I mean, you can see the bears over here at like 17,000 contracts, bulls over here at 104,000. And just to let you guys know, these far dated expirations does not mean that the whales expect a move on June 17th, 2022. No, this is them just buying time because within your options, you have what's called the Greeks. The Greeks are how you price in the premiums that you pay for each specific contract and how they move in price. That's all it is. Why you go far dated is because you have something called theta. Theta is time, essentially. So you don't want theta decay, meaning your contract, as you get closer towards that expiration, even if it's increasing in value, you're actually still losing value the more you get closer to that contract expiration. So that's why you go with further out expirations to buy yourself time and really make the maximum amount of profits on that play. And that's all that's happening with those June 22s. Not saying we may see another run in June. Who knows? I mean, we'll see how next couple of weeks go, but hey, I'll take it. Things are looking great. Quick update for you guys. Adam Aaron, a lot of people on Twitter, a lot of people all over the internet are saying, oh, how can you invest in a company when everyone's dumping their shares? Well, guys, it was all planned. Adam Aaron informed us in the Q3 earnings that, hey, listen, he's 67, he's getting ready to retire. He's got to kind of plan for future events, plan to take the wives on a nice vacation, take the kids, invest in them, whatever. So he sold some shares. We knew that. But it was a 3-month process, and today, officially, he's done. He's done selling shares, and he is all in. and this is great. I still own or plan to vest in 2,302,706 AMC shares. I am in. Adam Aaron's fucking ready, boys. I love it. And I know we have been kind of discussing, and it feels like a very often thing that we've been talking about this. Hedge funds kind of getting shut down, bleeding, you know, the whole 9 yards. Well, yet another one. We got Quant Hedge Fund to shutter after 11 years of trading. And I believe this was a UK, oh yeah, London-based hedge fund. Soleil systematic program was up 5.5% in 2021 and had lost 13% the year before, trailing peers over the period, according to investors seen by Bloomberg. The fund was just left with assets of just $51 million. Damn. Talk about a shitty year. And specifically, you're at 51 million, but in 2015, you managed more than 400 million. Man, I guess short selling is not the way after all. Huh, no kidding. Well, guys, we've been talking about this a lot. A lot of these hedges are bleeding. A lot of these hedge funds can't really last too much longer. Sure, Ken Griffin might be wagging his tail out there buying the freaking Constitution or whatnot, but the real biggest thing comes from those smaller size hedge funds. The ones that, sure, maybe short some other securities, maybe short AMC. Well, it's catching up to them, and those are the first dominoes that knock over the rest. And then eventually you get to those larger players. All right, just a quick recap, guys. We're looking great. Sure, the shit is boring to look at day after day after day. But to me, it looks like we're in the same setup from that last dip down at $20.80. And what came next? Well, it was a phenomenal $7 run. And it looks like we are just about there, just might need a small dip down in the morning. So we'll see what happens. All right, guys, that's all that I have for today's video. Be sure to smash that like button, subscribe for more content. You know what to do. Peace out.